I have a situation here on the Euro USD, and I feel I share this with you guys. If price is going to actually move as expected. So on the Euro USD, the first thing we'll observe on the 4 hours time frame is that price has been bearish for a very long time. As we can see, price in the last 6 to 7 month price has been going on a bearish momentum. However, if we scale into the 4 hours time frame and zooming into what has been happening since on the 24th of May, we will see that even though we had this bullish momentum that began on the 16th of May, we had price go, which sent price into 1.0800 area, after which we saw structures that look small, like a reversal pattern since the beginning since the later part of May, and we saw a breakdown of a key level right at 1.07 area during the course of yesterday's trading session with a bearish engulfing candle. So with this scenario at this point, I'm thinking that price is doing a retracement of that bearish engulfing candle, where I'm expecting to see structures on lower time frame that supports a trend continuation to the downside. So for me personally on this one, I want to see this area. I want to see this move. If we go to the daily time frame, I want to see this move as an impulse leg. Hold on a second, please. I want to see this move as an impulse leg, where this will be the retracement phase of that impulse leg that will probably send price going to the downside. So if we bring out our Fibonacci retracement tool, we will notice that price is currently around between the 618 and 78.6% retracement. Um, at the moment, you can see price appears to be right within this area at this point. So what this simply means is that I want to be looking for structures around this area that will support a trend continuation to the downside. So if we scale down to the 1 hour time frame, for instance, allow me to delete this. So if we scale down to the 1 hour time frame and look at what has been happening in the last 24 hours, we it is very simple to connect the series of lower highs and bring out a bearish trend line at this point. So if you allow me to give you a visual representation of what I'm talking about, we have something that looks like this. We had a low, we had a lower high, we had a lower low, and right now price is back on the trend line where I'm expecting price to continue to the downside. So the first thing I want to do at this point is to identify a key level that will guide our action going into the New York session. So if we look left, I want to look for structures where resistance and support actually meet at one point or another in the past. So if we look left, we can see here that this point has been a resistant level. We had a break above around this area. This place became a retest. Then we had a breakdown here on the 25th of May, and we saw multiple retests of this area, making this area a resistant point. Then we saw a breakout again, and this area became a support level, a support level at this point, a support level at this point. Then we saw this breakdown that happened during the course of yesterday's trading session, giving us a signal that the bears are actually have some momentum to push price further down. So at this point, at this area now, I'm thinking this area is going to be a resistant point going into the New York session. It's also possible to state here that this area here is a very significant, sorry, very sensitive area. As you can see, it shares a confluence with it shares the key level here at 1.07 shares a confluence with the bearish trend line at this point. So allow me to label those key level for the sake of clarity. We have a key level at 1.07, which is also a very strong psychological level considering the round figure, the nature of the round figure on this one. So we have our key level right at this area, and we are looking forward to price rejecting this area going into the New York session. So If we scale down to the 15 minutes time frame to see what is happening within that area, we have something like this. And I want to see price continue to rally right below the key level and the bearish trend line to join a potential decline in the nearest future. So with this being said, I have a scenario, a position side that looks more like this, where, hold on a second, please. So I have a position size that looks more like this, where I'm expecting price to continue to rally right below that key level. And we have our take profit target at around 1.05850. And how did I come about my take profit target? I looked at this impulse leg here, this bearish impulse leg, and I see we want to extend this impulse leg right into the future, want to project into the future. So how do we do that? We use our Fibonacci extension tool for the sake of specificity. And we run it right through that impulse leg. And then we have somewhere between the 1 to 7.2% and 141.4% extension of that impulse leg as my take profit target, which dovetails to approximately 900 pips. So with a stop loss right above that key level with around approximately 20 pips thereabout, then we should be having a ratio 1 to 5 risk reward on this one. So I have a pending order sitting right at 1.06841 and 1.06804. I also intend adding more position if I see price break down here a little bit, then come back down to reject that bearish trend line. Then I will be adding more position at the site of a reversal pattern at this point. So going into the New York sessions, we have two parameters that will be our guide going forward. The first one is the key level at 1.07000, which I suggest that we want to be seeing price rally below that level. And the second one is the bearish trend line here that I'm looking forward to see price continue to rally below it. So on this note, I would like to pause the video, and please note that regular updates will be shared in the comment section of my TradingView account for reference purposes as price action is being monitored. Thank you for watching and do have a wonderful day. Bye.